A judge has ruled that Gary Barlow of Take That may have to pay millions of pounds because he was trying to avoid paying tax. Along with his bandmates Mark Owen and Howard Donald, he put money into a scheme which purportedly supported the music industry. But Judge Colin Bishop ruled the partnerships they invested in had actually been set up to avoid paying tax. The MP Margaret Hodge, who chairs the Commons Public Accounts Committee, said that Gary Barlow might show a bit of contrition by giving back his OBE. This morning, the Prime Minister said he didn't think that was necessary, saying that Gary Barlow had done a huge amount for the country by raising money for charity. He added that any money owed should be repaid. So was Gary Barlow just doing the natural thing, trying to pay as little tax as possible? Is what most people do, isn't it? We'll discuss the rights and wrongs of avoiding tax shortly. There's, of course, avoidance and evasion, but maybe this is a new third category of avoidance. Let's try and shine a light on how the Take That stars avoided paying their tax first with Paul Lewis, presenter of BBC Radio 4's Money Box. You call this avoidance, Paul?
Yes, I do. It's sort of in the hinterland between avoidance. I mean, avoidance, you might, for example, you pay into a pension and, you know, you don't, that is tax-free. You pay into an ISA, that is tax-free. If you're self-employed like me, I spend money on a journey. I claim that against my income. That might be called tax avoidance, if you like. At the other side, there's breaking the law. Tax avoidance, though, is something different. This scheme is called Icebreaker. It was set up a 10 years ago by a woman called Caroline Hamilton, and the scheme has been accused by the judge of just existing to help people avoid tax. And some of the documents that it produces, things like you are looking to recover tax on £600,000 of income, it's recommended you invest £500,000, but your cash contribution will just be £125,000. You'll borrow the rest. It's highly complicated. The judgment takes 147 pages, and I can't pretend I've read every word. But basically, you pretend that you're putting money into entertainment projects, printing CDs or backing a band or backing a play, and in fact the cost of that is very tiny, but you make big losses because you borrow a lot of money to do it, but really that money remains yours. It's in a separate deposit account.
I am following that, and amazingly, so I'm going to try and ask. Well, I think understanding it is kind of crucial here. What I don't understand is, Paul, how somebody can claim tax relief on money that they've borrowed, because that wasn't their money anyway. So how does that work?
Well, it isn't at all clear from the judgment how it works, and I think the judge's view is it actually doesn't work, and that's why he said that it doesn't work, because this scheme, as you said at the start, it wasn't designed to make a profit in any way. It wasn't designed on a commercial basis with a view to profit. And how the arithmetic and the tax loss works still baffles me, and I think it baffles most people, but it's supposed to work, and these people are claiming big tax losses. And you know, you mentioned Gary Barlow and his Take That, two of his Take That bandmates. There are 950 people in these schemes seeking to hide £350 million of tax nearly, which would cost the Treasury, i.e. all of us, £120 million. So it's a very big business. And
how much money or tax did Gary Barlow evade or avoid? Do we know?
We've only got the speculation in the Times about this. I mean, they're saying he put £66 million into two of these schemes. His name wasn't mentioned in court, nor were some of the schemes he actually was involved in, but the Times have tracked him down through Companies House, and that's how we know he and his two of his bandmates, not the other two, were involved. They reckon that he put in £66 million and would have avoided about £20 million of tax. But that's all speculation. None of the people involved have been willing to talk.
Thank you very much, Paul Lewis, presenter of BBC Radio 4's Money Box. So let's speak to Adrian Huston, tax consultant who used to be an Inland Revenue Tax Inspector, and also Fiona MacTaggart, Labour MP for Slough, until last month a member of the Commons Public Accounts Committee. Fiona MacTaggart, first of all, what do you MPs, well, I was going to say on the committee, but you're not on it now, but what do you make of this?
Well, we've been pushing to make sure that people pay the tax they owe. And because it's our subscription to civilization, unless people actually pay their taxes, we won't be able to pay for hospitals, schools, roads, all the things that keep society going. And this kind of scheme, which is an egregious evasion of taxation, shouldn't be allowed. And unfortunately, the government's general tax avoidance rule is rather ineffective, and it means that HMRC, Her Majesty's Revenue and Customs, have had to go through a lengthy legal case in order to show that tax should have been paid in this case.
Adrian Huston, it is pretty simple, isn't it? If you've got 66 million quid, like Gary Barlow, and you get your accountant saying, listen, we've managed to avoid paying any tax on that, you know you're breaking the law.
Well, I wouldn't put it that way, but certainly I think anyone embarking on a tax avoidance scheme needs to think, does this look too good to be true? Because if it does, it probably is. But what we have here is someone who I am sure followed some very serious professional advice that this scheme was likely to be within the HMRC rules and successfully deliver its tax savings. And often you find these schemes are actually proofread and approved by QCs, Queen's Counsel, and you'll have written advice saying, yes, we think this is successful, and even if the revenue challenges it, we think you'll win. And on that basis, people like Gary Barlow and his bandmates can invest the money thinking they have legitimately saved a fortune in tax.
Just before I go back to Fiona, can you explain the thing I don't understand? If he puts 66 million quid into a scheme and then writes it off as a loss and gets a rebate, I can see that he's saved himself the tax on the money, but how does he get the money back if he's lost it?
Well, that is effectively the smoke and mirrors that these schemes tend to depend upon. You take out, you maybe put up 100,000 of your own money, you borrow 400,000 from somebody, and that allows you to invest 500,000 and get tax relief on that. But of course, if the person is looking for their £400,000 borrowing back, the whole thing starts to look incredible, and that's the acid test here. Is there something unbelievable in the storyline that's happening? And that's, I suppose, where Gary maybe was a little bit naive and perhaps a bit optimistic about the tax he was going to save.
Is that a viable test, Fiona? If it looks unbelievable, then the guy's doing something wrong?
Well, that's one place to start. In my view, what the government needs to do is make sure that these so-called professional advisors, the people who've constructed this scheme, actually become criminally liable, because they knew that they were engineering a scheme simply for the purposes of tax avoidance. It wasn't in order to invest in music products and things like that.
But within the rules. That's what they were doing.
They thought they were within the rules, but the point about this judgment, it says that they weren't within the rules.
The spirit, but maybe not the letter.
No. Actually, the law is the law. The point is that Gary Barlow has had to pay back, and the other investors will have to pay back the tax that they always owed. It's not some new bill. It's a tax that they always owed, but that they thought that they could get away with not paying. And I think the government's got to be much tougher. What they should do is make sure that the advisors and the inventors of these schemes, Gary Barlow has formed, he was in another scheme in 2012, the inventors of these schemes actually should be criminally liable when it turns out that they are fraudulent, that they're not real, that they are simply for the purposes of tax avoidance, which is what this decision today says.
But every single announcement from the Treasury, Adrian Huston, creates a little cottage industry, doesn't it, of financial advisors who say, OK, how can we get around this one?
It does, absolutely. Every time the government changes the tax law, then there's a bevy of people who are sitting thinking, right, now how can we take advantage of this change and achieve an advantage for our clients? But what we have now in the most recent budget is very helpful in terms of alleviating your listeners' concerns. The government is now saying that if someone wants to embark on a tax avoidance scheme which could save them a fortune, then they can, first of all, they have to pay their tax up front. So they pay their full normal tax. They then do the tax avoidance scheme, and if the revenue agrees, then perhaps some years down the line, then they'll get their tax saving. Whereas at the moment, the system is you pay very little tax, then the revenue challenges it, we fight for 5 years, and then the revenue says, right, give us that tax plus interest plus penalties. If people had to pay their full tax up front and invest in a scheme and pay a fee for doing that, in the hope of maybe achieving a tax advantage a few years down the line, the whole tax avoidance system becomes much less attractive.
Well, there is already a rule that says, Fiona, I think it came in under Labour, that any new idea has to be cleared with the HMRC. So the rules were tight already.
Yes, but they're not tight enough. And in my view, although the suggestion that the new arrangements will reduce this, in my view, I am quite certain that if we made it a criminal offence to invent something merely for the purposes of tax avoidance, just as it's a criminal offence to wrongly claim benefits, for example, then I think we would have a lot less of this, and I think that's the direction in which we should go.
Thank you very much indeed. That's Fiona MacTaggart, Labour MP for Slough, and also Adrian Huston, tax consultant who used to be a tax inspector. Do you agree with Fiona? We need a new law that makes you liable if you invent a scheme to avoid or evade tax.